afternoon. I'm Craig Hutchison. Thank you for joining us with the TD Mining Conference. Our next session is FPX Nickel. It's going to be presented by Martin Turenne, President and CEO. We're going to start with, I think, a 10 or 15-minute slide presentation, then we'll transition to Q&A. If people on the line have any questions, I encourage them to please submit them. If you don't, we will have some Q&A with Keith Gilday and I. So with that, I'll turn things over to you, Martin.
Great, thanks, Keith, Craig, rather, and Keith and the TD team for having us as, I guess, the only nickel company presenting today. So, yeah, great to be speaking with you all. So, yeah, we're FPX Nickel Corp. We're based here in Vancouver, trade on the TSX Venture Exchange and also on the QB market on the OTC. And we're focused on the advancement of a very large-scale nickel project in central British Columbia, which is at the PEA stage, which we're now moving into pre-feasibility study, and very excited to be able to talk to you about that today. Forward-looking statements should be taken, please take any of my comments with caution, and please review those on our website. So FPX is 100% focused on the Descartes Nickel District in central British Columbia. Descartes is an area covering about a 245 square kilometer land package. It's the region that we think can host multiple very large-scale nickel deposits, the most advanced of which is called Baptiste. So Baptiste will be the subject of most of our discussion here today. We completed a PEA on Baptiste in September of 2020, and that demonstrated that this deposit has the potential to underpin one of the largest nickel mining operations in the world. Annual production in that PEA was modeled at around 100 million pounds of nickel per annum over a 35-year mine life. C1 operating costs were just under $3 US per pound. So on today's C1 cost curve, that would be within the bottom quartile. There's very interesting mineralogy here, which we'll talk about in more detail. That lends itself to the production of a very high-grade nickel concentrate, nickel content in excess of 60%, also very low content of sulfur and other deleterious elements that allows this product to bypass smelting and go directly either into the stainless steel market or into the EV battery supply chain. We've also done work here to show that this could be a very low carbon producer, which we can talk about in a moment as well. So Descartes offers itself as something that could be sort of multi-generational in its scope and have close and deep integration into the EV battery market. You see here where some of the battery plants that are either operational or that are in construction or planned to be built in the coming years, dispersed throughout North America. Descartes is well located in terms of having good access to both ocean freight and or truck and or rail to access those end users for the nickel concentrate that we would produce here. The real advantage of Descartes and of the Baptiste project specifically is that unique mineralization giving rise to that high value product. One, again, that can bypass smelting, and we think that's going to have huge advantages both in terms of CapEx, OpEx, and also the carbon footprint associated with nickel production. You can see here that Descartes is located really in the middle of central British Columbia. We're about 80 kilometers west of Mount Milligan, 200 kilometers northwest of Blackwater. Those are both large-scale deposits. Obviously, in the case of Milligan, been operating for several years. In the case of Blackwater, now moving into early stages of construction. Both similar to ours in hosting large-scale bulk tonnage operations. They have both established, I think, a very strong precedent for the permittability of these types of projects in BC, and that's going to be a key focus for FPX moving forward as we get into the EA and permitting process here in years to come. We have good access to road, to rail, and also to power to underpin, the advancement of an economic project here. Within the Descartes district, there are, as I said, opportunities for the development of multiple deposits, the most advanced of which is shown here at the southern end of the image, that is Baptiste. Baptiste is the host to the third largest undeveloped nickel deposit in the world. There's over 2.5 million tons of nickel contained, or about 7 billion pounds of nickel, so that the metal endowment here is considerable. Over and above that, we have done drilling at some other targets in the region here that have shown the potential to host other similar scale nickel deposits over and above Baptiste. So we do see Descartes representing an opportunity for a multi-generational nickel operation. As I mentioned earlier, the nickel at Baptiste and at the Descartes district generally is hosted in a unique mineral called awaroite. Those are the small reflective grains, the silvery white grains that you can see in the image of the core here. Awaroite will only occur in a host rock environment that is depleted in sulfur. There's high nickel content in the mineral itself. The mineral is comprised of 75% nickel, 25% iron. That's as opposed to typical sulfide minerals like pentlandite, for example, where the nickel only represents 1/3 of the mineral of the chemical content of the mineral. In the case of awaroite, that lends itself to the opportunity to recover a very high value nickel concentrate using a very simple flow sheet. So awaroite is highly magnetic, so we can use those magnetic properties through 2 stages of magnetic separation. We can reject over 95% of the feed mass to tailings. That leaves a small footprint for a flotation circuit to therefore recover nickel into that high value concentrate. There's also the potential to produce an iron ore concentrate, which is upside potential that we would like to explore in the context of that preliminary feasibility study. The nickel concentrate really drives the value here, and as I said earlier, there's opportunities to briquette this product and to put it directly into the stainless steel market, again, bypassing smelting. But most of our work really in the last several months has also been looking at the potential integration of this concentrate into the EV battery market. So the chemical companies that produce the cathode active materials that go into the battery packs, they typically use nickel sulfate or NiSO4 as their principal feedstock to produce that material. The production of nickel sulfate, whether it's from sulfide or laterite forms, typically has a very long, complicated process, one that involves multiple owners of the product throughout, often can involve multiple countries. So there's a huge sort of transportation aspect to that and the associated kind of carbon footprint of all of that transport of that material. With the awaroite mineralization, the ability to bypass smelting and to take the concentrate, to treat it hydrometallurgically, to recover the nickel into solution, to get rid of the iron in the concentrate at that point, and then to have a feedstock into the production of nickel sulfate, suggests that we might have kind of a mineral here that represents, in some sense, the holy grail of nickel production. One that fundamentally, represents the view that's been expressed by some car makers, where they want to really look at opportunities to reduce the number of stages from the mine to the battery. That's easier said than done for sulfide and laterite deposits. However, we see a clear path with our awaroite mineralization here to do just that, with the CapEx, OpEx, and the carbon advantages that entails. On carbon, we've done some good work to demonstrate that Baptiste can have quite a low CO2 footprint, emitting around 2.5 tons of CO2 per ton of nickel produced, versus some of the alternative forms of nickel production, where you can see we're very low on that carbon curve, and we think that's going to be fundamental. That positioning on the carbon curve is going to be fundamental, not just for nickel projects, but frankly for mineral projects and mineral deposits going forward in the next generation. That assumes that we're using a diesel-fueled mining fleet in the scenario where we could have zero carbon, let's say hydrogen-fueled mining fleet, we would be at practically zero carbon nickel production. We also have the ability with our tailings material here to sequester a significant amount of carbon dioxide. That's as a result of the reaction between brucite, which is magnesium hydroxide, which would end up in our tailings. The reaction of the brucite with ambient CO2 results in the sequestration of that CO2 in permanent form. And this is something that would only further reduce the CO2 footprint of the operation, to potentially setting the stage for this being a net carbon negative producer of nickel in the long term. In terms of sort of project development, where are we at? Focus really in 2022 is trade-off studies and metallurgical test work at that PFS level to underpin the production of a preliminary feasibility study, ideally by mid-2023. That metallurgical test work, I think, is fundamental to unlocking the value here. We are dealing with a relatively novel mineral here with awaroite, and while the flow sheet relies on conventional unit operations, I think the milestones that we can reach, particularly in pilot scale test work, will show to the market that this is very much an economic source of nickel, and one that can use, as I said, very conventional methods of metallurgical recovery to produce that high value product. terms of where we sit in the landscape of nickel projects in the marketplace, some listeners may be familiar with most of the project names that are listed here. The bubble size here corresponds to the scale of annual production, mine life shown on the horizontal axis, and operating costs on the vertical axis. Certainly among the larger projects, those that have larger capex, larger annual production, and longer mine lives, we think we're in a very favorable part of this chart, and particularly as it relates to kind of having that profile for low OPEX. We also like to kind of compare Descartes and make the point that it's not just kind of stellar among nickel projects, but frankly among base metal development projects globally. This index here looks at the ratio of mine life to payback for a variety of different base metal projects that have been in the market over the last several years. So this ratio of mine life divided by payback, we think, is a good way to compare these projects. And you can see that we rank quite high on that list, and those projects that are higher than us, have been some of the most highly valued projects, reaching into the billions of dollars of market capitalization, certainly in years gone by. Despite that, we still view FPX as a deep value opportunity on a multiple basis. We're trading at about a 0.05, 0.06 multiple to our project NPV. And I think the work that we can do to de-risk around metallurgy here is going to really has the opportunity to catalyze the stock and lead to a significant re-rating up here in months and years to come. Just quickly on the share structure, 213 million shares outstanding. Management has a very significant position, owning just over 18.5% of the company. We have around 14 million in the bank, and we're fully funded for our 2022 activities, underlying a market cap today around 120 to 130 million. With that, maybe I'll pass it back to Craig and Keith for any questions or comments.
Thanks, Martin. Maybe just start off. Last year, we saw a lot of buzz around governments getting involved. The security supply was a critical issue. The infrastructure budget in the U.S. included billions of dollars for downstream processing. Have you had discussions with either the federal or provincial governments in terms of support through the permitting process, through just some funding grants for downstream metallurgical work to date?
We have, yes. And I think there's going to be opportunities for some potential kind of non-dilutive funding, particularly given some of the novel aspects of metallurgical performance here. I would say that it's been interesting, when we talk to some of the downstream market participants, so these are the large battery makers, the large car makers, some of them have mentioned to us that their discussions with Canadian federal government has indicated that the federal government will be stepping in and providing significant support to project development. We haven't seen that yet in our discussions with the federal government, and I think publicly there has been no announcements in that regard. I wouldn't speculate that would be definitive, but certainly it's some point of feedback we've gotten from some of those downstream participants that we haven't seen come to fruition yet.
Okay. And First Nation partnerships are always critical, especially in Canada. Any updates on where that is? Any IBAs? And maybe just talk about community relations in general.
Yeah, so there are two nations here who have kind of traditional territory rights within the footprint of our project. We have enjoyed good relationships with those groups over time. We're in the process of renewal of exploration memoranda of understanding with both of those nations, and hope to be able to kind of report more to the market on that in years to come. And I would say that in general, we've faced no opposition to exploration or to the concept of mine development here, but that is something that we need to continue to secure through our activities day in, day out. And it's something that sits squarely in the center of my plate as the CEO of the company.
And maybe just on partnerships, we've obviously seen the nickel market heat up here. Not only the prices, but the M&A activities heated up as well, with IGO going after Western areas, and of course the bidding more for Noron. Any increase in discussions on that front, or anything you can sort of discuss in terms of where your head is around in terms of partnerships?
Yeah. I think that some of the activity we've seen has been, in some ways, I would call that kind of the starter's pistol. Pistol has been fired, and we are seeing a lot of interest now in the project and in the company, far more than we ever have, from a variety of different counterparties. Some sort of purely financial investors, but a lot of sort of strategic interest among diversified majors, and indeed the downstream as well. So that would be, the battery makers and the car makers themselves. So I think it's an exciting time for nickel explorers and developers, as I think there will be sort of greater availability capital and potential for partnership from any one, if not multiple of those groups to push projects like this forward. So it's been exciting, I'd say, particularly the last 6 to 8 months. It's picked up considerably.
And just on the battery space, you mentioned this would be a suitable product for the EVs. Given the iron content that you produce, I know you talked about producing an iron ore byproduct, but LFP is becoming an increasingly popular source of battery, given its the cheapness of it relative to some of the more nickel intense batteries. But would that be something they would be interested in as well as acquiring some of the iron content that comes with your concentrate? Would you potentially see a source of revenue from that directly from the battery producers?
Yeah, it certainly is a possibility. It has been the subject of some of our conversations with them. Again, you're in the same way that you need to drive the nickel to very high purity in order to be suitable to go into the cathode. The same would be true for the iron content going into an LFP battery. And so it's still a question for us to answer as to whether we can drive to an iron product with the sufficient, purity requirements. I would say though that, given sort of differential pricing on a per ton basis between nickel and iron, the economics here are always going to be driven sort of at least 90% plus by the nickel content.
For sure. Keith, any questions?
Is that part of your met testing with iron ore? Is that included in your current met testing?
The met testing for iron ore is really focused more so around more of a traditional use case for iron, which would be, feeding that material into carbon steel or potentially even stainless steel production. But based on kind of how keen that downstream are, it is something that we could address over time as well from a met testing standpoint for LFP. But we really are focused on the nickel.
And then what you have the phase 2 met testing. You're going to have something out on that probably Q1 Q2. What's that phase 2 going to tell us?
Sure. So we're in the midst of what by the time it will be done later this year, an 18-month PFS level met test program that is occurring in multiple phases. We reported the results of phase 1 just before Christmas. That was really focused on the front end comminution and magnetic separation. Was very confirmatory of our assumptions and the previous bench scale test work in that regard, and even identified some recovery improvement opportunities. Phase 2 is going to be focused by and large on sort of the flotation. So that's the back end of that main mineral processing flow sheet. Again, looking to confirm the flotation performance at both a bench scale and a pilot scale. So those results will be out probably in late Q1 or early Q2. Phase 3 is the phase that we're probably the most excited about. That is a 20-ton pilot scale demonstration of the flow sheet right through from the comminution through mag separation into flotation. That will produce a considerable amount of concentrate, which will then allow us to produce nickel sulfate on a sample basis. That phase 3 work will be done at some point in the latter part of Q3. So critical de-risking steps, but what we're seeing in that test work to date is very much validating the assumptions that were set out by that bench scale test work, and as underpinning the PEA, and we think now underpinning a very robust case to take those assumptions forward to a PFS as well.
Fantastic. And you had an exciting discovery with the van target this year. What's your plans on delineating that, and what size do you think that could be?
Yeah, so as I mentioned, Baptiste is already the third largest undeveloped nickel deposit in the world, and our project development team has, in some ways, their blinders on to make sure that we're moving that forward towards first nickel as quickly as possible. However, that exploration potential around Van is sitting off there in a parallel track. We'll continue to drill Van. We only drilled about half of that sort of target this year, so there's a lot more drilling to be done. The thesis with Van is that it could host a deposit that is either larger and or higher grade than Baptiste. The first 9 holes we put into it last year on very wide spacing certainly preserved that thesis. we'll be back up there this summer to expand on that. And again, to continue to probe and test that thesis that it could be, in fact, higher grade or larger. And interestingly, what we saw in those initial results was that the higher grade was nearer surface than it typically is at Baptiste. Much of the higher grade at Baptiste is at depth, whereas at Van, we're seeing that higher grade is near surface. So that's of particular interest to us for obvious reasons.
And then just in conversations with the battery makers and OEMs, having that kind of scale is probably beneficial, and you can entertain multiple conversations on a project that size, I imagine.
Yeah, the scale is important both in terms of the annual rate of production here and the potential mine life. Like we Baptiste supported a 35-year mine life. We see a clear path to this being a multi-generational, very large scale producer. Again, at the scale envisioned in the PEA, this would be one of the 10 largest nickel mines in the world. What that annual scale also allows us to do is to play with the potential around using that offtake strategically, right? If we're producing 100 million pounds of nickel per annum, even 20% of that is actually very substantial to any potential downstream user. And so there's always the potential for us to do a small amount of offtake in order to induce some upstream investment, some partnership that would still leave us a lot of strategic flexibility where we haven't sort of given our firstborn away, so to speak. We know the importance of offtake in this sector, and the scale of production gives us some real strategic flexibility that way.
That's great, Martin. I think we're going to have to wrap it up there at the end of our session. I appreciate you attending and appreciate everyone who's online. Please join us the next 5 minutes or so for our lithium panel. And with that, thanks, Martin.